Please welcome to the show, Mr. David Stryzewski. David, thanks for being on. Who's the man behind the curtain?
Well, I think that we're getting a glimpse of sort of the abyss here. If you remember, we've had so many market rallies that have gotten us up to these high heights right now. And so I think it's super important that we understand, what can we know about what's going on. After hour trading, predominantly institutional players, hedge funds, banks, asset managers. This is big money. This is what we actually want to follow as investors because they tend to do things that tend to be in their best interest, right? And so, one of the things that we can see right now is that there's a lot of algo buying, a lot of algo selling, and so that's where things get to certain thresholds, or you see, changes take place, and then there's, some different trade-offs that are occurring. Now, one of the things that I see though is that you can take a little thing and create something big. There was no headlines over the evening, just like you were talking about. So what on earth was so earth-shattering when that didn't hit the wires? What was it? And ultimately, I think that what we're seeing is the highs get hit, and instead of buy low, sell high, I think what we're seeing is you sell the rip instead of buy the dip.
Okay, so, I've been doing it a long time. I'm 59 years old, my 38th year. The first thing that comes to mind is somebody needed to move a big order, and there wasn't a lot below to buy it from them, right? It's just sometimes that happens. That can happen during the day, too. And also there's the idea that a lot of these overnight markets are there for foreign customers, right? The folks in different time zones that want to maybe use our products. But to not have anybody talk about it, I think this is the first time I saw it on Twitter was this morning. One of the, Trevor, one of the producers, he said, this is really weird. And I hadn't really heard about it. And I looked again, and there wasn't anything said about it either. But when you go back and look, yeah, sure, there are some big time moves. So I guess what I'm trying to say is there's a lot of folks that maybe aren't really immersed in the markets like you are, or maybe even I am. But what do you tell them when you start to see this type of volatility in their 401k or in their things that their 401k touches? That maybe do they need to disregard it, or is it something that they should, take on board and maybe have some insurance on?
Yeah, great question, Scott. Holy smokes. If you don't have your anchors in place before the storm actually shows up, good luck trying to not capsize. The thing I'm actually really concerned as we're talking about these global dynamics is the Japanese carry trade and how that's unwinding. I think that's really the root of this story. But getting back to what you said about maybe a boomer who's looking at retirement, or maybe they're getting laid off right now from an employer that's not got as much cash today as they did before, and they're in a higher interest rate environment. That boomer or that individual should be looking at, are bonds really going to hold me in the same way? What is a good long-term outcome? And if you follow what big money's doing right now, what the central banks are doing and institutions are doing, I think you're going to come up with some interesting ideas. But one of the things I'm going to just share with you as a simple idea and thought here is that, in my opinion, there's never been a better time to own something called a growth-oriented fixed index annuity. This is actually an insurance contract. And here's what's amazing about it. It gives you a hedging strategy. It's not about getting rich. It gives you a hedging strategy, none of the downside when the volatility comes, but reasonable rates of return on the upside. And essentially, they've done maybe like 2% over what 10-year treasuries have done. And so you can think about that as an outcome over a 10-year time frame. We need to step back at moments like this and recognize that if we have a 50% drop, then 100,000 becomes 50,000. It takes 100% of 50 just to get back up to where we were before. That reverse.
Everybody
is devastated on retirement plan.
Everybody fails that question when you ask them. You ask them, if you have 100 grand, you lose 50%. What's the answer? They get that right, 50 grand. What's the percentage you need to make back the next year to get back your 50 grand? And everybody says, 50%. No, you need to make 100% back, right? And that's hard for people sometimes to get their head around. And I think you make some great points. I said it during the day here today when I was interviewing somebody else about something different. But my father was in the business for a long time, and this, with what we have happening with the tariffs and Trump's trying to take the Band-Aid off a market that really needs to have a little bit of a shakeup here, because we both know that status quo ain't going to go, right? We can't keep going on this road of spending $40 trillion in debt and having $2 trillion of a budget deficit every year. That's not going to work. So this guy's coming to the table with an idea. We got to go with it because nobody else has any ideas. But the problem is it could cause some pain, right? And so this is the time you want to have a return of your capital, not a return on your capital. What say you?
Absolutely. And I think that institutions, businesses right now are even looking at layoffs or different parts of their practice, like Skype's not going to be around anymore next month. So they're going to see different parts kind of change. And so this is a time that I think people would look at and they'd say, hey, you know what, if there's change in the air, maybe this is a time where there's going to be some adjustments. So I smell risk. I smell volatility right now in the water, at least through July. And because everything that we knew in the numbers finishing last year are completely different this year, but we have a better outlook. We've got a better long-term move, but I think President Trump is looking at the long-term and not the short-term. This guy's in for the next 4 years, not the next 8 years. And so he wants to have changed America's economy. And I think that he's on a path with some really smart ideas to do that. What are the collateral damage along the way? I'm not sure, but I smell some risk in the water, and I think people should be prepared.
And we got to give it a try, because the status quo, we can't keep doing what we're doing. That's the bottom line, right? All right.
We're going back.
Love having you on, David. Your content's fantastic. David Stryzewski coming to us from Kirkland, Washington. Great having you on the show. We'll see you again next week. Thanks. Have a great weekend, David.